Ethereum USD. Ethereum USD, we see a nice pullback. I was expecting a pullback, yes, as we were bullish, just bullish structure, expecting a pullback to, just pull back to the previous area in order to continue. But I didn't expect it to happen this fast in just one day with just one daily candle. So that happened. Of course, I saw my portfolio suffer a lot that day, especially when we were down here. It's not a nice feeling when you're up a lot and in just one day you see a 20% decrease on your money, basically, depending on how much money you have invested, but still, whether it is $1,000 or 10,000 or 100,000, still not nice to see money decreasing, basically. So here, I had this zone marked out before the drop. It's not like I did the analysis after we were dropping. I had this zone marked out. Why do I have it from here? It was more on lower time frames. I was trading this zone actually during August. I was buying from here with some not intraday positions, but medium-term positions, and played out nicely. And that's actually the zone that held on these pullbacks. We had the pullback, and I was like, okay, if we are breaking this zone, I will think about disinvesting something, because that's basically structure. And if we break this zone to the downside, then the bearish bias could come into place. As we were going up, we had, the crash of May, now the pullback. But if we hold this order block up here and we break bullish structure with breaking this zone, then yes, it's not a real nice situation. I would prefer to disinvest some of my money. Let's say basically I would prefer to do that. So the big arguments that we should talk about is two things. Both are very important. One is that usually, and maybe I shouldn't say it because you are my student and you're learning from me, but this is very important, it will help you. So usually traders who take courses, I took courses too in the past, you trade what you are told about the markets. So basically, if I teach you that the market moves with market structure and with supply and demand and so on and so on, you will trade that way. You will not trade what you are seeing from the markets. I hope it makes sense. You're trading what other people told you about the markets. So this is, well, I know you're my student already, so you already decided to take my course and everything, but this is just a parenthesis just to tell you that in case you are wondering or you are thinking about buying some other courses, and of course I support that, as I bought many courses when I was younger, when I was getting started. It's not that I get jealous, because you shouldn't. So you can get as many courses as you want. All I'm saying is just be careful who you are taking courses from, because many people, first of all, they don't trade, they just sell the course. Second thing is, many people are teaching what they learned from other people, and they all teach what they hear about the markets, what other people are saying about the markets, not what they actually see every single day in the markets. I have a folder on my PC with almost every single trade, not every single trade, but every single useful trade, which was interesting, whether it is a loss, whether it is profit. I have it saved, and I go back and I review it, and I understand why the market is moving one way, why the market is moving the other way. So make sure to learn from people who are teaching you how the market is moving according to what they are seeing from the market, not from what they heard about the market. Okay, give me a second. By the way, Going back right here, very quickly, as you know, I was targeting these equal highs. By the way, really, if you have questions about this, text me right now, right here in the chat. We have equal highs up here, so I was targeting these highs. And at the same time, we are turning bullish on lower time frames. By the way, this is the Asian session, which is the concept that I said that I'm implementing and that I will share once I finish the backtesting on this. And honestly, EURUSD is looking pretty good as we are breaking all of this structure. So we can possibly look for buys, either from here, if we grab this liquidity, or from, well, that depends, possibly from here. Let's see. I will just take this zone. Even if it was mitigated already, because we created the order block, went to the upside, mitigated this, not really the best option. Actually, maybe we could move it to this one, but still, I would just take the whole zone. Let me see how many pips that is. It's 10 pips. Since I will look for lower time frames confirmation, that's fine. We don't necessarily enter up here. I will just look for some type of confirmation at this area. If we don't have confirmation, I will wait for lower prices. We didn't really do much chart work today. As I told you, I'm looking for buys on EURUSD. Look for these two zones, this one or down here, below the liquidity down here. Now, usually I would prefer this zone right here, but at the same time, we just broke structure with this move to the upside, so this could be a good option too. So it comes down to waiting and seeing where we will have confirmation. Here, basically, nice. So, I don't know where your stop loss is. Honestly, I will move it below this level. If it is already there, then I will keep it there, because I see this liquidity, and in my opinion, we either stop at this order block or we grab the liquidity below this one, we tap into this order block, and then we continue up. If we do continue up, this is my analysis, this is what I'm expecting. So I will move it below here, below this candle, and in general, you don't know where to put your take profit. I have no idea about what restore the ratio you used. I mean, if it is more than 1 to 5, you can start taking some partials. If not, I will put my take profit at the next 1 hour supply, which could be this one, but this is minor. I mean, if we are starting a bullish movement, this will probably not hold, but definitely at this one, all right, before that level. Again, this is what I will do. You can manage your position in a different way. This is how I will do it. And also, in order to trigger stop loss in profit, I will wait for this breakout structure to the upside right here, and I move my stop loss in profit below this one at that point, since we broke another structure basically. So this is where we have to look for double confirmation. So as you know, on lower time frames, when we look for confirmation, we look for you can call it Wyckoff, you can call it 1 minute strategy, you can call it whatever. Basically, what we're looking for basically is manipulation, in this case to the upside. After the manipulation, break a structure, confirming that we're going to the downside, and then we usually enter. In this case, if it is, if it is a little bit more risky, as this really looks bullish, If we want to look for a trade here, we should look for a double break of structure. So basically, same thing, manipulation to the upside, grab of liquidity, whatever, break of structure to the downside, and then another break of structure, and then we enter. Let me make it clear. So wait, this is the 4 hours. Let's say we get to this point and we drop to the 1 minute or the 3 minutes or the 5 minutes if you want, depending on how you trade. Start accumulating on 5 minutes, on the 1 minute, whatever, and we have grab of liquidity, which should be this one, break of structure, and usually we look for the entry after this. Okay, we usually look for this entry. Instead, if it is, you know, less probability, like this one, very big push to the upside, very big momentum, trend still looks bullish, we come down a little bit, we still can look for an entry, as we don't know if the market will actually turn bearish, could be, and we look for the second. We don't enter right here because we don't know if we will stop here. Maybe we just create one break of structure and then we go to the upside. How many times do you see that? It really happens a lot, because structure on lower time frames is not as important as structure on higher time frames. It doesn't hold, it changes a lot. So it's normal to go up even if we change the structure once. So manipulation, change the structure, retest whatever. If we hold it, and of course we don't catch the entry, another break of structure to the downside, and now we're looking for the entry. Okay, you look for your order block, supply demand, which is breaking the structure, and then we enter. Now, I was thinking about adding some course content on the concepts that I was backtesting, and also about this, basically where I tell you, yeah, there are some, well, maybe we should just differentiate between higher probability entry and with the lower probability entry, we transform it to a higher probability entry just by waiting, basically, okay? What to do if you have fear of losing, getting more confidence in your trading skills. If you have fear of losing, I know it doesn't sound easy, but I believe you are not trading the right way, meaning that you're not having fun trading. This also opens another argument, which is that what I mean by fun, I don't mean like gambling fun, like trading shouldn't be fun in that way, but at the same time, your mood affects your possible results. If you are trading with fear, which is, oh my God, and again, I will talk about this in the FTMO stuff. If you are trading with fear, fear is not, let's call it, not a good emotion. I don't know if any of you talk about vibrations and stuff. Fear is a bad emotion, basically. There are bad emotions and good emotions, of course. Love and being grateful, having love are good emotions, and being fearful and fear and anger, if you're angry, they're not good emotions, basically. I'm really putting it easily. If you are fearful while you are trading, you are already in a state of mind, and also your body is not in the best possible situation in order to get a good result. Now, of course, you understand this, how to not have fear. First of all, one recommendation could be go back and backtest some trades. Backtesting builds confidence, and you will find more confident taking trades. Other than backtesting, understand why you had losses and accept those losses while you understand. Basically, you're learning what you did wrong, and at the same time, you are building confidence and so on. And the last part, in my opinion, is maybe you're trading, I don't know your personal situation, but maybe you're trading too much. when I was trading 10 hours per day, I used to go crazy. I used to get bad results. When I selected my trading hours, I don't know, London Open or New York Open for 3 hours, 2 hours in the morning, 2 hours in the afternoon, then I started doing better, way better. So this. Another thing that helped me, and of course it's not the same for everyone finds their own, but is putting music while I trade, music that puts me in a good mood, all right? So a mix of these things, and I believe that